Hey, it's Clay, and this will be a video chart on ticker symbol HMNY. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I've been doing this analysis on a very routine basis, so that's where the green and red line annotations are coming from. And on that note, definitely some updates here need to be done as the bears took another big bite out of this one. First update, just a little house cleaning. Going to go ahead and get rid of that line. Sure, it still pertains. It's just not relevant right now, and I don't want to have lines all over the place and risk causing clutter and confusion. So we'll try to keep this as clean as possible. The first update, though, is just based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So going into today, that 24-cent mark was resistance, was support, but now that the price is broken below it, that would be the initial and key level of resistance with any sort of continued bounce, going into tomorrow. And the price, to give credit where credit's due, I'll give some to the bulls. I mean, they did start to put together a bounce. The problem here is that the track record of bounces has been very spotty. There is a little bit of a bounce. Right here was a little bit of a bounce, and then it rolled back over. I mean, this thing's totally in a bearish, downtrend. And, while I'm not saying you can't make money from the long side, this is definitely kind of a cautionary tale about why you don't want to say, all right, I'll play the bounce, and if it doesn't go, I'm going to get out. And then all of a sudden, it turns into, okay, well, I'm going to buy some more. I mean, think about the people that have been averaging down. People that played that bounce and then it failed and then continue to drift. Okay, I'm going to buy some more. Okay, I'm going to buy some more. I'm going to buy some more. Their accounts are being blown up into oblivion. So that's why I'm saying, I'm not saying that money can't be made, but if you are not a disciplined trader, if you do not understand risk management, risk analysis, you shouldn't even be trading in the first place. But that's a whole nother discussion. But especially on stocks like this, definitely stay away. As far as where the supports are at this point, once again, like I said yesterday, it's just a matter of where the bleeding stopped, and the bleeding finally stopped today at 18 cents, so that'll be the key level of support going into tomorrow. So yeah, we'll see if this bounce has any sort of genuine momentum behind it. Odds say it doesn't, but you never know, so we'll see how it plays out. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.